If it's going to move down, it's going to do it off this range, not this range right here, I think. It could, but yeah, if it's going to move down, I think it does it off the higher range.
Tell me if the audio is okay. Had to play with a lot of settings lately.
Seems like a pretty decent level, 66.87.
Hopefully this is okay. Yes, test 1, 2, 3. Good. All right, perfect. Okay, very first thing we can talk about here. 3-minute level. Obviously, 3-minute level is only as good when you're walking through a move. In this chart, I've marked the 3-minute level. I've got trend hard close. When you have a 3-minute level, a 1-minute level, a 5-minute, these smaller time frames, they can be deceptive in a way. They can be deceptive in a way because even if you look at the screen right now, you see a 3-minute right here, we see a 3-minute up here, we see a 3-minute up here. This upper 3-minute has been holding the entirety of the move down. You can see that nothing has hard closed over it. So you could get into a scenario where you have a level marked here, right? You hard close this time frame doesn't hard close. This is something I often see people muddling through time frames to try to find which time frame is hard closing. So they often get stuck. They often see a 1-minute hard close or a 2-minute hard close, or sorry, a 3-minute hard close, 5-minute hard close, a 15-minute hard close. They often get stuck in not knowing which moment is actually hard closing. So the first thing we have to do whenever we're looking at hard closing is we have to make sure we're looking at the highest time frame. So here I've got a 3-minute selected. I'm not sure exactly how I walk through this move, but just as an opening kind of sentence to what I'm seeing here, I would go through all of my time frames here to find the highest time frame and then pay attention to that hard close. For example, if this 3-minute here was also a 15-minute, I would give no attention to the 3-minute hard close. It's important to observe it. However, the 15-minute is really what's important. And then even beyond that, I would see what this is testing up here, because this looks like it's testing a more important level, and this is just creating micro time frames below that. So you could go and you could hard close this 3-minute here, which might look like the end of the move, because you're closing over trend in 3-minute. You could then back test whatever this is and not hard close that as well. So just whenever you're walking through a move, it's critical to know that there are many time frames that will hard close, but understanding which time frame is the key. It's like picking a 1 in 10 kind of thing. You have 10 cups and there's only one ball in the cup, the famous traditional 3-cup magic show, except this could be there's 10 cups here and only one of those cups has the ball in it. It's the same thing. You have one time frame that has to hard close, which is super important to realize.
I mean, 66.87 looks decent. 66, 85, 88. Come on. Did I already get picked up? Hello? Oh, it did. Nice. There we go.
Okay, now this is like years old. What is this? 2020-03. So this is like a year and a half old. I'm not sure what level this is, but it's really important to realize that whatever this was testing can test these upper ranges and hard close back underneath this. So that's really important to realize that something can go and deep dive like crazy like this. The lessons on deep diving have been coming out recently. There's 2 more coming out this weekend and possibly a 3rd one. But this is a scenario where you've deep diven a level, gone after a higher target, gotten filled, and you're probably still closing whatever this was testing right here. So just to be aware of that. This is a very common setup, a very common scenario.
Come on, Bitcoin, pull back. So you guys can see how I found that level.
as I'm watching this move, I would be paying attention to this trend hard closing or not. Like if we sank below trend in the next candle, so when I mean the next candle, I mean not this candle, because this candle can't hard close a trend. If the next candle opens above trend, sinks below it, it's typically going to be major rejection at that point.
How I played it, how I found the level, kind of in the moment, exact seconds, and it's free rolling right now, right? So what I'll do here is put this at 95 or 90 in case it breaks back over, and I can just click and get out. If it starts moving up, ridiculously fast, I can just click and get out, or I could take profits now, $100. I think I'm going to let it ride a little bit. I'm going to see a pullback here, I think. I can realistically close this whenever I want now because I could just buy up, right? So I could just click this at any time and buy up. So that's fine. But I do think we're going to see a big pullback. So hopefully you guys got.
So that would be pretty key information here. And with this 3-minute level here, it's really why I'm keeping it on the 3-minute time frame here and not using the 1-minute level, because with this 3-minute level, I do want to see if it hard closes above it, even though there's still other 3-minute levels here. I know at a minimum that if this 3-minute level doesn't hard close, it's forget these ones up in the upper range. The lowest 3-minute level that could hold us back here if we start closing underneath it. Obviously, this is a deep dive knife catch. Is there any questions while we're here looking at a deep dive right now? Is there any questions about deep diving? Because I don't think these videos are going to take too long to go through. So if we have questions about deep diving, let's talk about them right now.
Got in on that trade at 87. There it comes.
And then so with this move, immediately the first thing to pay attention to, what would you guys look after? Like what would be the first thing that screams to you right now in this trade? What would be the very first thing? You look at this trade and you're like, oh my God, that just happened. What would that be? Not trend, something else past trend, because trend was kind of like step one. When you're walking through a move, in this particular move, kind of trend and level were step one. Like when we roll back time 1 minute in the video, the first thing we said is, okay, well, if we have a big move down below trend, it's huge rejection. So what would be the first thing you would see after that? Do I generally watch whichever time frame I need to hard close on? Not always. Ladder broke. Important, but not ultra important. Lower range being attacked again with a ladder, important, but not the most important thing here. Kind of a loaded trick question, right? The most important thing, because how would you guys know what I think is the most important thing? It's a little loaded. Notice when I was watching before, it looks like an origin that could be breaking out. Closing valley cannot hold backside and front side. I want to take profit. That's a good one. Breaking the ladder up. So those are all really good. The most important thing I see here on my screen is the fact that we've just created a backside right here. So if this continues to dump, like that's the number one thing that sticks out to me here is this backside. This was a major rejection and it created what's going to be the rebuy for the future. So if we start breaking above this, this is going to be kind of our final like get out and lock up profits. The actual hold level right here. You could possibly test trend again. You would be in a longer term position. But right now what screams to me is that we just created a backside value off of a backside valley off of this right here. So this is what I would expect is you either dump straight down or you go back, test that valley and have a huge move down. So that's the first thing that screams to me. Before I'm worried about breaking ladders, because ladders are all the way down here. So what you could do is you could move down to this ladder point right here. That would be the kind of the simple thing to see. You would see, oh, you can move to here, move up, back test this valley. Really, that doesn't tell us what to do in the trade. You need to have kind of a point right now when you're in this trade. So you've taken, so we're at 2 minutes and 30 seconds. So you've taken this extreme knife catch, this deep dive on the move that's going to reject trend. You've taken this knife catch and you need to know when to get out in profits. So JCap was right in one way. That's like, you always have to have like, where do I get out in profits here, right? Above this valley would be dictating I may not be breaking down in that same way. So I want you guys to think about data points. What data points right now are getting created in order to tell us what can happen next? So that's kind of the key piece of information here. When we break below this valley, it's telling us that a data point is being created, a backside level, which is going to bounce this down in a big way. If we lose that, right, where do we go? So that's kind of a key piece of information. Like, what data point just got created? Because a ladder point was already created. This data point is already in existence from back here. This uniquely created its own move right here. This uniquely created a new data point right here in this moment. So it could give us a very clear, hey, we move up to that backside, we start breaking over it, get out of the trade, lock up your profits. Or you have to know that you're not going to be bouncing down in a huge way. So an example would be if you broke over this backside here, I would fully expect ladder, ladder, ladder. So if you move down here to trend, go back up, target this backside, move over top of it, I would now consider that a new data point here because this data point was created. It creates the backside test of the trend, which I don't even think is relevant here, by the way, but we're using it anyways just to prove a point. Touch the backside trend, move up over this backside. That now becomes a data point as a ladder point. And this deep dive created this data point. So this is really, really critical to understand that in the moment, you have to look at, oh, we got a thumbs up the video. We didn't do that. In the moment, you've got to look at the data points that are being created because this is telling me in the instance that if we can continue to hold this level here, we should just stay in the trade. As simple as that. So you have to realize this data point was already created. So its relevance, it falls to the wayside. The relevance of this data point, it's there. It's already been there. We've already had time to think about that. We've already had time to analyze it. It's a part of the current move. The same with this one. There's another data point. It's already there, right? But this one just is getting created in the moment. So in the moment, it gives us kind of complete control to see if this will bounce us down or will continue to break up and use this as a data point. Because again, if this breaks, then this could be a ladder data point created in that moment. But right now we have this.
Yeah, there it is.
Questions? Early in the same moment that the market crazy. Yeah. That doesn't need to hard close that valley backside. So it will test. Like this is the thing. If it closes it, it confirms it. It will go back and test it likely. So you know you've got your lower levels here as targets. When I was doing these sessions, these are 100x trades with a small amount of money. Like I think in these sessions, if I remember correctly, I was requested to use, I think it was $500. I think it was like 250 or 500 because they want when I was training these guys, they wanted to keep up and they weren't using max leverage at that point. So I wanted to move mine down so they could follow easier. So the profits here, this would be more entry price, mark price. So that should be like a full, yeah. So this would, I believe this was like, maybe it was like $300 or $400, something like that. Buys 8 Bitcoin, whatever 8 Bitcoin at 100x was back then.
At the top, boys. This I'm going to buy up because we hit trend, backside of trend.
So that would be a point where it looks like 1.5% in a few minutes. I had my levels marked trend. In hindsight, I know trend is not the right level to buy here, but my concern and thinking here was, okay, we hit trend. That was going to create a ladder point, right? Ladder, ladder, ladder. It was going to break above this. In hindsight, it was not the correct thing because we shouldn't have even been using this trend. But also when I'm teaching and I'm in the middle of teaching a lesson, you know, I not only want guys to lock up profits if they're watching and they're following when moves, or if they decide to follow moves. Not only do I want them to lock up profits, but it's hard to analyze at a higher level while you're teaching.
I will buy that up and take my profits there. So
This is where I would be concerned right
just
here.
over $600 in profits because I do see we hit trend and bounced off. So I did take my profits. So
but that could be a point where I actually would have said, okay, do we hard close this now? Or should I lock up profits because I missed the knife catch? But I got the knife catch pretty good there. But do I lock up profits? I think that ended up being a full 2% almost. Do I lock up profits here now that I'm above, or do I wait for the hard close? So it's not always bad either to take those spots of profit.
yeah, Now,
the
it's
hard close
likely
over.
going to fall below trend, but again, it's 100% in 2 minutes, right? So more than 100% in a few minutes. So, like I said, it's likely going to fall, but to take 100% in 2 minutes, it's like, yeah, we could be done work for the day, right? So that's like $600 today we just made. So, yeah, likely going to fall further here, but that's okay. Again,
Yeah,
it's
they're still around on Discord. Lou.
I think it's a pretty good trade for 1 minute. Sometimes you just have to cut your losses. I
Ladder
wasn't looking to
point,
turn this
level,
into a
ladder
bigger
point
trade, but
breaks,
maybe I should have.
moves down.
But that's okay too.
Talk
You
about
know,
missed
just
opportunity.
taking what damn. Whoa, that really fell. Whew, I missed a lot. One of the reasons I
Okay, this is a good point to stop it. So you can see where my level comes from in this. Actually, I'm gonna let it play. I'm gonna see
didn't
if we zoom in a bit.
want to stay in this trade also is because I don't have levels marked out below. So I'm not really prepared for where this could possibly go.
Okay, this is good. I want to see where this level comes from above. So this here is just the ladder on the other side. Very straightforward. Greediest part of the move. Deep dives this range, attempting to break over top. This is attempting to create an accumulation cycle. You can see, if we were walking through this move, you can see where the setup is created. You have a long-term trend, right? You have a level here. It was the 3 minute. I'm sure there's a 1 minute, maybe even a 5 minute there. I'm sure there's a couple levels here. You break above it, you break trend. What looks like a move up attacks the next range, falls straight down. This is so atypical of not only Bitcoin, but all markets where they have one range that breaks. It breaks too fast, creating a deep dive opportunity to go after an untested level, and it sinks right to the floor, thus just creating ladder points, right? Thus just creating a ladder point from here. Now the new ladder point data set from here, right? So this is just so atypical. And what I would do in this scenario is you can't use this lower time frame now because you are creating. So this is kind of like a really good tip because you are creating a cycle. So if we kind of start that thought right here, cycle, you have a trend that kind of goes like this, that breaks. You have the next trend that goes here, that breaks. The third one, kind of creating this cycle. This is all ends up just being noise in the lower time frame. Even this, what looks like a ladder point here, because it's back testing this right here. Even what looks like noise in the moment, it just ends up being noise on a smaller time frame. So at this point, when you see a range broken like this, and here's really where you have to pay attention. When you see smaller ranges broken, you have to move to a higher time frame to see the range and to see the ladder points. So when this is created, it would have been kind of the same thing here. Like you have move down, ladder, ladder, ladder. Aha, breaks the ladder. Aha, breaks this ladder here. Goes after the greediest part, which looks like this right here. Goes after that greedy part. When you have broken ladders on lower time frames, it means you need to move up in a time frame. So like right now, what would that look like? I guess we can't do it right now. We have to do it down here. Right here would be a good example. You see how you have a ladder, a broken ladder? This means we need to move up in time frames. Ladder, ladder, broken ladder, right? Broken ladder, move up in time frames. Kind of a trick. Aha, look at this. Now we have ladder, 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 broken time frame, right? Now you have the hourly. Now you have the time frame you need to see. Ladder, ladder. Now you can go and do this. Broken, right? That's broken. There's your trend. Aha, move over this, break the move. There's like a little golden tip for you guys, some butterfly effect 2 magic. Now all of a sudden you have the actual part of the move that's going to break the range. So now you know how to break a range. And everybody's going to be like, well, what the hell? Do that again. It's a little bit of butterfly effect 2 magic. That's where you break the move. So just to go over that again, whenever you have this kind of noise, whenever you break a ladder, it means you have to move up in time frames until the ladder is no longer broken to find the trend that controls the range. Make sense? Not at all. I know it's very far beyond butterfly effect 1, but that's okay. It's a good practice for you guys to understand that. You guys will be able to review this video, go back through that, and that's how you find where ranges break. I know that's a good one. Maybe tired, but I'm not. I'm always sharp. Even when I'm tired, I'm just like kind of
Because I
all
don't have
tired, but
levels marked out
still
below.
sharp.
So I'm not really prepared for where this could possibly go. Yeah, I'm not at all prepared for where this can go.
Oh, hold on, I want to read WD's comment here before we move on. This is where moving in time down in time frame makes your decision important. It's a key fundamental to make a right decision. You can't live on lower time frame charts and expect good results. And that's true too. There's a balance of when to move down and when to move up. I just showed you guys when to move up, and there will be a balance of when to move down that we'll discuss in the future, right? So there's always a balancing act there of when we move up in time frame and when we move down.
And this is kind of like the last thing I want to see is this thing rip right back up, and
How
then
cool
it,
was that little trick?
breaks back up. I definitely don't want to see that. Now I don't think that's going to happen here, but yeah, I probably definitely left way too soon. But that's okay. It's like, yeah, catching that top was important there because you guys can see how it reduces risk, right? And the last thing I want to do is see this trend confirmed. It's the first touch of the trend and it's moving up, right?
I want to reread WD's comment here. I want to make sure I read it properly. Moving down in time frame is important to make your decision. Ah, yes, moving down inside of a higher time frame. Yeah, WD is right. So I think what he means is moving down. Like what we did is we moved down inside of a higher time frame here.
So you guys see how I managed the trade? I waited for the right moment. I executed it.
And I think this is important to talk about too. Whenever we look at trades, like you guys, so I have the stop loss video coming out today. You guys are going to have a huge, not only being in mentorship, but seeing the stop loss video. It's like incredible. The video is going to even for WD, as great as he is, I even think he'll get value out of it. That's how good I think the stop loss guide is that I made. In my opinion, it's going to change a lot of traders' ways that they've tried. So I took so long to do it this week because I wanted to make sure it was just perfect. Mixed with a stop loss guide and finding the right opportunities in a market like this, there really shouldn't be a lot of spots where people lose money. I think after this week, after this guide comes out, there's going to be a huge shift in a lot of traders. And I guess what I'm saying is pay really close attention to that stop loss guide today because it is insane. That mixed with finding levels like this, you really shouldn't have moments where your risk goes greater than a few percent. Like really your strike rate, and what strike rates is in stocks, for those who don't know, is a successful trade versus a non-successful trade. So if you made 0.1%, it would be your strike rate would go up. If you lost 0.1, it would go down. Your strike rate should be relatively high in the markets. When you start thinking about deep diving the most extreme levels, where to stop on them when things go bad, and understanding things like data points, that becomes like three pillars to like creating a system where you're always making money.
In that second, just like we did yesterday, right? Execute it in that second, make my decision. I have my level marked out. I
Shorted 48.3 and left it open overnight at 100x. Huh. Stay in the trade, question mark? That's not bad, dude. Good one, WD. You should have well, if it moves down, you're good.
know I'm going to target that. So when I see it moving up really quick, like I told you guys yesterday, I see it moving up extremely quick. I can just enter my trade in 1 second. It's filled, and then I can start preparing my exit to where I wanted to. Now, again, this was a scalp. Probably should have waited, but that's okay. 100%, 100 and whatever percent in a couple minutes is pretty decent. So yeah, that's going to be the action for a while here on Bitcoin now, because it's just going to be either falling.
Great job, WD.
To
Absolutely
get re-entry on
man.
this for the next part of the move. Oh boy.
Thanks for you.
I'd like to see where it stabilizes instead of worrying. So we made about 1.3 and lost probably another one point something. That's too bad, but that's okay. Still, I mean, that's great profit that we just made. So no big deal. This is likely starting a downtrend. Like, this is what I was saying. It's going to be a very crucial point that we're in the moment. Whether it's breaking up or down, these could be the best entries for a big move up to the weekly. or this could be the best entry for a big breakdown. So there's a couple scenarios here that I don't really like. I think this is a huge move down, seeing this kind of volume, 7,000 Bitcoin. Well, actually, this is buying up volume though. This is offsetting the shorts. So I don't know. I guess we'll see. This is a crazy amount of volume. Like this 2 minutes, 12,000 Bitcoin. This is a high amount of volume. That's really, really high. Holy Hannah, is that ever high? Like those 2 minutes is like more than what most hourly candles have. That's crazy.
Not that that matters. It's just fun to point out.
Well, at least you saw how like it's done, right? Like at least you saw how to execute the move. Like you have kind of two levels, right? You have these two different levels. You have
I never use volume in order.
You're kind of your
It's fun to point
intermediate
out.
level, which was at 66.42, which was like, nah, that kind of looks like crap. And then you have your higher level, which is like, okay, this is most
Actually have
likely
them
going to reject.
turned off
Like,
on my
the chance that this rejects
exchanges.
is huge, right? Just because again, you're kind of creeping up to this level.
So, do I use volume in order book? So, when I trade through my bank, you don't get to see that stuff. You just have a blank screen that looks like this. This is actually important to talk about, so it's worth stopping the video for. You have one box that says, it's like a box right here, and it says ticker. So it says ticker. The next box is like two buttons that says market or limit, and you pick one of the buttons. The next one says price you want to pay. Price right here. And so you enter your price, you enter the ticker, you enter limit, and then it asks all the other stuff, like if you want to do puts and calls. So it asks you if you're doing like derivatives or options. Down here, there's another box for that. This is like a bunch of radio buttons inside of a drop-down box. And then it asks for the date that it's good through. So then there's like a calendar right here, the calendar icon, and it asks you the good through date. So GT, which is good through, which is when you want your trade to execute, has to do with puts, calls, and also limit orders like that. And then it has a submit button right here, submit. So whenever I'm trading stocks, commodities, or Forex, I use TradingView mixed with this, and I don't use anything on TradingView at all. So I actually don't even know what volume is. Like it could be zero for all I care, or no, it could be millions of dollars in volume. I have no clue. I don't even have a spot where I can even check it. If I put it on my TradingView, I could, but I just don't care about that because then you can't use those things on the type of account that I have. So actually, I don't even know those things, which is really important to point out because really just with data points, we should be able to make all these decisions.
It's going to explode over top of it, and it's just going to target the next piece of the move, right? So, and sometimes you don't necessarily want to just continuously ride a move down. Sometimes you want to be able to just say, oh, hey, look, there's a percent, 1 point something, especially if you're 100x, like that's a lot.
Have it in the video, like right here. Oh, this is just like Binance default. This is just like the default on Binance, like their default layout. This is even right here. It has depth. Like I just don't change this stuff. I get too frustrated with Binance because how many times I've customized my Binance windows like this, and then they have some kind of browser issue, and you have to reset your you have to release cookies and your cache. Like you have to refresh your settings, or just clear your settings, I guess you'd call it, and then it just goes back to default anyway. So I just leave it on default because it's too annoying to constantly change it all the time. Even candle colors, they'll stay for a week until you have to reset your cache.
A lot of money, right? So sometimes you just exit
volume
at 1% regardless, or 1.5% or whatever. You have a criteria based on the move. Like sometimes you just want to take different exits and entries, right?
I don't use when I customize my Binance window, I take off the order book. Actually, I don't take it off. I make it ultra small, just because sometimes I like to click the buttons.
Yeah,
because I'm lazy because I don't want to actually enter a price. So sometimes I use it just to click a spot in the book. Like I set so this number 1 here, I set to either 10 or 100, just so I can quickly click and hit limit if I need to get out of something. So I don't have to manually punch in numbers, which is the same thing as market sometimes. Or sometimes like I want to click to actually have a limit and not a market order buy up. I just want to put it like the next. Like if I'm trying to long something because I'm in a short, sometimes I'll just put it right here, and that's not a market order executed through limit. It's just me putting it up on the books because I know it's going to fall down. So I'm just taking that extra 7% for myself. And like I would click this 6583. I would highlight where is it? The close position where you can go to the price. I just click it once, so it highlights all the text, and I hit my up arrow key once. So it's just 1 cent above, and I hit limit just so I can sell in that moment without having to chop that 7% or whatever the market fee is. It ends up being pretty high. So that's the only reason I use depth chart. I completely take off. Trades is completely off, and most of my screen is just my chart. And that other stuff that stays there is just, and usually I double click to take off the volume too. But then it just, it ends up being a scenario where you have to reset your browser because Binance won't load. I'm sure everybody's had that problem. Binance stops loading for them. You have to reset your browser. It's fine. And then you lose all your settings. It's just like, forget it.
Haven't really tested the backside.
Depth option? No. This, I completely take all this stuff off. Reading the comments right now. Videos on volume where he explains how he looks at it at the moment, and you see immediately it can be used for trading. Yeah, I do. That's true, Jens. If anybody hasn't seen that, it is on Patreon. There's videos I have on volume. Never had that option, that issue with Binance. I'm sure many people have. Small guy panic sells. The final long point was hit. Not sure, just a thought. Yeah. It's interesting to like, I will say, as a teacher, I've used volume as a tool of psychology. I've used it to dissect the way people think in the markets. You don't use Binance, that's why. Anybody here who does use Binance ever have that issue where their Binance doesn't load until you refresh your browser? Like you refresh cookies and completely clear your history? Like clear cookies, clear browser cache, all that stuff. Yeah, people have that all the time with Binance. So you can go and change the colors on your candles. You can get it looking perfect, exactly like TradingView, and then like 3 days later, you have to reset it all. And it's just a pain in the ass to constantly do it. Keeps on loading and loading. Yep, you just get a black screen. Yeah, so people know what I'm talking about. That's why I have this crap on my screen, is just because it's just default, and I just don't. I just get too annoyed.
Of trend, so it did have a little bounce there. So the last thing I want to do is lose profits because this thing rips right back up, right? Like it was over 1%
Almost
at that point. I think it was like
Yep.
1 point, it literally caught here to about here. So it's like 1.3 that I got.
I've had Binance log me out when I was in a massive 100x trade and not able to log back in because of that. And I've ended up not having enough time to either put my stop loss in. This was before I automated my stop losses. I've either not had enough time to put a stop loss on, got liquidated, or I've missed out like 6-7% in one of these insane 1 minute candles where the volume is so high that you can't react. And then when you refresh, because your Binance freezes, it logs you out and you can't log back in because their servers are down. And what could have been a 600 or 700% trade within minutes ends up being like a liquidation. It's Binance is horrible, but it's the best of the worst in my opinion.
And 1.36. So like the last thing I want to do is start getting into like a scenario where I'm like, oh, this is 0.8 profits and it was such a good trade.
Binance
you know,
is really
like
bad.
80% is not enough for me there. Now it falls down another percent in a bit, but the last thing I want to do is be in a situation where like, man, I have to exit this trade on
That's
a
happened
failing
to me.
level.
I've probably lost a solid
So
like 50 grand over errors on Binance.
too many times I've been in situations, and well, yeah, you just trade over time, and that's what it is, right? Not everything is big, massive rejections like this. Like this is
Maybe
nice
even
to
100
catch, like,
grand
over
these
2%
kind of
move like
stupid
this,
errors, like getting
in a
locked
few
out and
minutes.
not
Like
having
that's
access.
fantastic. And if you had all the
Probably
levels
like
charted
over
and
100
everything, and I
grand
had some levels charted down
just
here,
on
but I
like
didn't really
software
have
issues.
time to look at them. But so many times you see like, oh, I could have made 1%, and then it moves up and you're 0.4, and then it's like, okay, what do I do now? Because it's going to pull back to try to hold the move, and I could sell there, or I could just continue to hope it moves down still. So instead of a scalp, it becomes more of a position trade.
Yeah,
but sometimes then you can make
phone.
like 1 to 1.5 on a scalp, and it's only a few minutes. Like, why wouldn't you? You know, like if you're, especially if you're 100xing these extreme levels like this, like take your profits, because that allows you to just either walk away for the day and then just start back again tomorrow, or it allows you to just simply continue to trade with no risk, because now we have a positive profit of $620, and there's no risk. And that was, we did the same thing yesterday morning. We walked on, we found a move. Yesterday's was 4%, which was nice. Today's was to only 2%, right? But it's like the same thing. You just like, if you made $500 a day and you worked 300 days a year, like what is that? That 150 grand to work all of 1 hour a day. So that's like pretty crazy, right? So sometimes you just have to realize like, oh, I'm up 1% or 2%, let's just find another spot. Because there's nothing wrong with taking 1 to 2% all day long across different trades. You know what I mean? Like no risk trading and just taking these spots. Because now we've 2 mornings in a row we've done this exact same thing. So now it's like, okay, that's cool. Step on, take one trade, step off, right? So it's like, yeah, pretty good. Just want you guys to realize, like, I have a few different levels marked out here. Let's talk about the trade. I have a few different levels marked out here, right? Like my first entry earlier in the day was at, and it really pissed me off because I tried to buy this level, and in my order history here, well, it doesn't matter. I bought this level and I got filled for, like, this top of the move here was actually my order, the 66.3350. That's my order, but it only filled 2 out of 40 Bitcoins. I put a couple $1,000s on this, and so it didn't get whatever this one was here.
This is a common occurrence. I do want to talk about this as people get better as traders. Let's get to the point here.
Where was it? 6610, and it only got filled for 2 Bitcoin. That's what it was. It was some level at 6610. Where the hell was that? And it was the top of the move. So it was
Imagine that back in the day
trading
trading
one
with
of these
40
candles.
Bitcoin.
Anyways, it doesn't matter. And so let's, this one was a 40. Doesn't matter. My first one trade at this level.
We got to find that again. This is important to talk about.
Only and
I think it's cut off on the screen. I think that's why you guys can't see it. Filled. I think it's cut off on the screen.
Where is it?
So that's important to talk about when you get too greedy in a move, like
66.
In this move, I got filled within probably very top of the move that you guys saw that dump there. I got filled probably very, very close to the top. We're probably one of the last people on the books. But when you're too accurate in these markets, there are times where I do find that the more interest that's in a level, the more it gets front run. And this isn't something to live and die by, but something to realize. And as you get better and better in your trading, realize that the stronger the level, the more it ends up getting front run, which actually changes the architecture of the charts. Like if you were to go to a 4-hour level here, reverse levels are very, very unknown to this point. You're going to see this in the stop loss video. Here's a 4-hour reverse level. Okay, here's the point. Here's where it's getting filled, right? You can see it right here, 4-hour reverse level. It doesn't quite get hit to the T. It does here. It does here. But as you have more kind of basic and common levels, like let's go look at somewhere else maybe. As you have more basic and common levels, there becomes a here's a good example trend. The more, like, the stronger the level, the more it ends up getting front run. So I think this is just something to be aware of as traders, that a lot of this information is now becoming easy to the world. And there's kind of a common, there's very common levels used now in trading, as there, it wasn't quite so 3 years ago, and it hasn't really changed that much. I have just seen a small shift, and the ultra strong levels are easier for more people to see now because of stuff like what I do, and maybe other people are doing it. I don't know. But anyways, the point being is that now that people are getting more aware of technical analysis and the science that's used on the chart, I have noticed this past couple months that levels are getting ridiculously front run the stronger they are. And this is happening on the most basic information. So you guys don't have that much to worry about. But when you have like a trend that's been there for weeks on end, and it's just like, oh, this is such a common thing. Like, it's like 4-hour to 4-hour. Yeah, okay, it gets front run by, super small amount. It's just important to know that it get, sometimes these levels are getting front run a little bit on the most common basic stuff. And it seems to be the highest timeframes. Just to make people aware of that. It's pretty important because, back in these days, it was happening too, right? Like, this is a deep dive on this move to a pretty crazy level. So you can get filled. Like, the crazier the information, the more likely you are to get filled. But just realize that ladder points are created off of levels getting front run sometimes, and that level will never get hit. Rather, it's the ladder point that controls it in the future. So nothing changes, but just something to be aware of, I suppose. Get this back up for us. A front run, just like people put their order a few dollars above the level, just to make sure they don't miss the trade. The stop loss guide will help with that too today, a lot. The stop loss guide, well, I want to mention that today because of that stop loss guide is coming up. WD has it perfectly. What WD said is like, pay attention. That's exactly what it is. No risk trading, that's key. And WD, you are gonna love the stop loss guide today. You're just like nailing it on the head. It's like you're right on key with it. It's so crazy. Slippage guaranteed. I've been filled like 1% of my position. Yeah. I front running here. I was going, goddamn bastard.
10 and it only got filled for 2 Bitcoin. That's what it was. It was some level at 66.10. Where the hell was that? And it was the top of the move. So it was I don't remember. There's one of these candles in here. Anyways, it doesn't matter. And so it's like it doesn't get filled. That's where my trade starts. Like that's where this whole thing starts here. So, you know, I get up, I start trading at 5 a.m. there. Start trading at 5 a.m. Start marking levels and doing all these different things. Really, I was targeting this range. So actually, you know what, the best way to do this would be to go here, BTC USD perp, like this. And to go here, and really what was happening in this moment was like this, right? It was quite simple, right? It's like, okay, this thing looks like it's gonna have a pullback. Sorry, I'm on a 15-minute time frame here. I need to be on a smaller time frame. Yeah, so this is where we see that pullback this morning. Yeah, right. So this is what we're looking at. So, you know, you've got some different levels here, where, you know, you're kind of looking and saying, okay, like here's, you know, your first rejection point, here's your second rejection point, and this is what I was looking at here. And you know, you come up here, and this is where my trade, it was 63.3350. So I kind of got the last order, but it was only for like 2 Bitcoin. I closed it at 66.10. That's what I was seeing, but I opened it at 63. Yeah, right here, 63.50. And it only filled me, which was stupid because it only filled me for 2 Bitcoin out of the 29 that I had up, which was a piss off. Like, it's like, come on, man. Like, you know, because I'm targeting this level. Okay. So, or I'm targeting this level here, right? Because this is the 5-minute, and the level gets front run a little bit. So I go here and I'm like, okay, 66.35. That's fine. There's going to be a pullback on this level. So here's a level right here. It's a few cents away, less than $1. So I just do 66.350. Obviously my order didn't get filled. At that point, I'm no longer looking at this level. I'm saying, okay, technically the level didn't get hit. Yeah, technically this level doesn't get hit. Okay. So that's fine. Where can it target next? So then we're kind of going and saying, okay, here's that 42 level that we were looking at. 63.42 was this right here, kind of a greedier point. And it's like, okay, well, this could possibly have a move against that. Maybe it's going to first test this and then have its pullback. So this was kind of the next range I was targeting, right? In the meanwhile, I'm looking at this and saying, where's the range that's untested on the larger time frame? So I kind of have a few different parts of this trade planned out, right? I'm sitting here and I'm saying, where's the range? Oh, this is apparently a level from before, right? That's what it hit, right? 68.83. Yeah, that's what we would target. So what the hell is this from before? Oh, it doesn't matter. It's not what it hit. So that doesn't matter. What it hit is this level here. So I'm just simply looking at this and saying, okay, what's, you know, if this thing is going to move up quick, what is it going to move up to? You know, exactly what it did. What is it going to move up to if it starts to move up quick? So I have a choice here. This level, I'm not even worried about targeting anymore. It's already tested.
And if you can't use Binance, you always advise to chart BTC USD perp and then find the levels in there and other charts. But what if the backside hold, as example, doesn't exist on the other exchanges? It won't matter if it exists or not. The Binance chart will set the price, and then arbitrage bots will hold it down. So you have arbitrage bots, you have different people trading those exchanges. You have to realize one of the reasons why Binance works across all exchanges is because market price can only go to a certain point before arbitrage kicks in. When arbitrage starts kicking in, the level's going to get held no matter what, because arbitrage will sit there and just slam it through, right? Like it'll just completely eat up anything that goes on the books. So if Binance is dictating the market price due to volume, and it's also having the levels that are most respected to create market price, then arbitrage will kick in on every other exchange at those same prices. So you can get slippage, but the level will hold. That makes sense? Unless the exchange is so small and there's not enough volume on the exchange, that arbitrage just can't exist. Arbitrage keeps the price in line because market price can't slip too far past what market price is, and market price is dictated by Binance due to volume now. So yeah, I mean, you always use the Binance price. You can have slippage. You can have one of these crazy candles that just skyrocket, but it goes right back down, and it shouldn't affect stop losses because it won't be a limit price that gets hit. It's a market price, I believe. I don't even think it's not even a market price that gets hit. So it actually won't. It's a limit price, not a market price. So a stop market won't actually trigger. A stop limit would, but a stop market won't. That's why I use stop markets, not stop limits, because a stop limit would trigger because it would hit a price and trigger the sell. But a stop market, that wouldn't be the market price. Market price would still be being held down. So it's one of the reasons I use stop markets. But when you're on Binance, it won't matter because Binance, you use a stop limit on Binance or market, that won't matter because that's the exchange that has it. But if you use stop market on the other exchanges, arbitrage keeps it in line, limit price goes through, but market price doesn't. Hopefully that makes sense. People make money with arbitrage, but it's risky. It can be risky. I don't think they make that much money. There's too much arbitrage that happens now. Arbitrage has been maybe back in like the early 2000s on other things, or arbitrage in crypto back in like 2016, 17 maybe, but now it's too regulated. I don't mean not regulated as the exchange is regulated. There's too many arbitrage bots, so like it's too competitive now.
You're already testing inside of this range here, so we can go back to the smaller time frame. You already have a tested level here. I'm not interested in that. You have kind of an untested one here, but again, it's so close that there's no reason for this level to be respected, right? Like you measure how much profits could be there, and it's like, why take this trade when potentially it falls down and hits this whole level 0.5? So you kind of your first best case scenario 0.5, like why, right?
This is really important. It's funny that we're doing this, walking through a move from multiple years ago. You guys are going to see today on the stop loss guide video, this one right here, you're going to see today why this trade doesn't make sense to take right here as another trade after the first part of the move. So I just want you guys to remember this moment when you're watching the stop loss guide video today. And I'm going to say right now that this is a low risk trade right here. And this is a no risk trade. This is a no risk trade due to the extreme polarity in the level, in the move, in the range. This is low risk because no risk is existing up here. So just realize that today when you guys are watching the stop loss guide video, we identify this as low risk. That's why we only take it once and not twice. And this is no risk in how we can knife catch it.
Just didn't make sense, right? So, looking at this earlier, and then, fine, whatever, we go through the motions here, that level is finally hit for real. And it's like, okay, fine. This level is not going to be respected. This 42 level is not going to hold. Again, it's the same thing.
This level here acts as polarity between low risk and no risk right here. Nobody will understand that until they watch the video. So just watch the video today and remember this moment.
It's like, okay, why are you looking at a 0.2 move, right? Like it pulls back for 0.2%. People aren't going to take that trade. It doesn't make sense. Like when you see somebody dump thousands of Bitcoin, like what just happened, that starts with one person who has, 1,000 Bitcoin wall, typically not that. That starts with one person who executed the trade exactly like I did. They bought down as it's moving up at the exact level, right? So that's the thing. So, your decision is quick, right? In this moment, I know this isn't really a realistic level. At the same time here, I can't see a bunch of people trading down for 1%. Also, at the same time, I know this is trying to break a larger trend here. So I don't think you're going to trend break into a point of rejection. That really doesn't make sense. Instead, you have a very quick move, and I was prepared to make that trade properly, right? So
just again, this is critical that we're going through this today. It's just the gods have it only one way. They line it up perfectly. So the stop loss guide, because I talk about this exact scenario in the stop loss guide today. It's one of the examples that I use. Not this time frame. It's a different chart completely, but it's the exact same setup, and you guys will see it today as to where this is low risk and this is a no risk trade. So with this being low risk, it can only be taken once, and this can always be taken after the no risk executes. which has its own no and low risk sub umbrellas inside of here and inside of here. So just again, remember this moment today as this was a low risk trade and it can only be taken once here. So when I execute the trade, I'm not interested in seeing it again further. And this is a no risk trade with polarity. So that's why it can exist.
66.87. Is this a
Funny that video recorded March, what is that, a year and a half ago, uses the exact same principles that I'm using in a video that I recorded this week. It just shows how strong and powerful the science is because it's really dictated and derived by data points. I think a lot of people in this group will realize that today, that a year and a half later, and we're using like identical, like literally identical one-to-one information. It's just because the data points are communicating a timeless fashion that's being used. So it's really cool, actually.
level we targeted? Oh, this is the level. Okay, so it was this level. I thought it was up here, 87. Oh, that's fine. So anyways, the decision is the same. It's just, okay, which one, right? I'm actually surprised that this rejected so hard, seeing that this is where it would reject to 1%. I'm actually surprised that this pulled back so hard. But then what I was about to say is that there's also a larger event happening right now. So this isn't kind of your typical move in the moment right now. Usually, I think this would have crept up to that level that we looked at, that 68 level. Actually, I think that would have crept up to that level relatively quickly, but maybe not in 1 or 2 candles. I think you would have had 5-minute bursts all the way up to it. But then we had that larger trend. Oops, let me erase this. Come on, get out of here. Then there's the larger trend that was going on this trade, right? Like you've got one trend here and you've got the back test of that daily. And I know that daily's breaking because it's on one of my charts. So I kind of know that daily's breaking. I didn't know I was going to back test it, but that's fine. What was that? XBT? Oops.
So back at this point, this was right when XBT is a legacy Bitcoin ticker before Binance was really popular. This was BitMEX's ticker that was used from day one, and then it changed to BXBT. So just to clear up any confusion, if people see me using BXBT in the charts, there was some point, and I don't remember the exact point, but there was some point where XBT was no longer being updated. The API switched somewhere. XBT still is updated, but it's not being used. BXBT is BitMEX's new ticker for leverage. And those don't even matter because we used XBT back in the day before Bitcoin hit 3,000 in 2018, I guess it was, back when I was trading it then. Like when that old school clip of me where I said Bitcoin's not going to dump. It's on GateX right on the homepage. That was like 2018. And that's when we used XBT. So I do use XBT sometimes in these videos just to clear that up. But there was a switch where Binance became the #1 exchange. And then we just used BTC USDT perp. So we haven't always used BTC USDT perp. We actually used XBT back in the day. So a lot of these things that you have to find legacy levels on sometimes exist only on XBT. Like this stuff back here, we couldn't have found that on Binance. You had to have found it on XBT. And then same with this here. Same with this drop down here. That was an XBT only type of thing. So like all of this stuff was like XBT only. Even like right here, like look how simple this one is. It's actually really silly. So this was never used, but you won't find these legacy levels on Binance, just as a heads up to you guys. These don't exist on Binance. They exist on XBT. So if you guys ever need to go and do legacy work, like even here, if we're going to use like a legacy level, it could be this, right? So legacy levels exist on XBT, and then BXBT is what they changed to. There was some moment, and I don't remember when. It might have been sometime in 2020 because I have levels marked here. I don't know. There was some moment that BXBT was used, and then it was between BXBT and BTC USDT perp. And now it's just BTC USDT perp. But if you're looking for legacy, it's XBT is where you find your legacy information, which is important to know. I've been here long enough. I remember when we used XBT. Yep, exactly.
Let's go here. can't believe it back tested.
Just in hindsight, how easy is this level as a weekly hold level? How easy was this level? So what did the price actually go to? 13,871. What was it, like 13,870 or something? Just scroll down memory lane. 13,854. So like, how hilarious is this? This is the same old science it's always used. This stuff never changes, right? Like it never changes. It's always the same.
So perfectly unbelievable. It's a good target, right? Like it's a really good target. Now whether the target was that or something else, I don't think this move is done because I think you are breaking trend to go up after this level right here. Let's turn this purple. But you guys can see how this trade unfolded, why I targeted what I targeted, and then what makes sense here on this trade. We have that. Okay, that's tested. That's fine. And you guys can see why I targeted what I did, right? Like kind of the same thing that happened yesterday in our trading session. Something's moving up quick. I'm prepared with the level, and in one, a split second, it's over. So that's the kind of reaction I'm looking for when I'm looking at seeing these levels hit. I
notice how this backside is holding the move down, like what we said earlier in that data point, where that 3-minute backside would have been the critical level I would be looking at in this trade, right? Like that's it right there. Important to realize. Also important to just talk about locking up profits. I know I preach this constantly, and this is like literally the only thing I ever say, lock up your profits, but it really becomes an easy thing to do once you set a daily goal of making like 1%, you scale your leverage to that 1%, that you need to make your daily income. Like if you need to make $200 a day and you want to be a 100x trader, you can trade with $200 a day, make 1%, walk away every single day, make your $1,000 a week off 1% with relatively low risk. $4,000 a month, it's 50K a year. $200 a day, $200 leverage, or go for 2% on 50x leverage. Whatever schema you decide that works for your comfort level. The key thing is here, it is critical, and that's why I exited this trade, because I really didn't care what happened after this. And I stand strong and hold to this. I never look back on trades. I never say, oh, I could have made, I say it, but it doesn't bother me. It doesn't become a point of contention that actually affects my mind in any way. I'm just like, oh, cool. It's just kind of like this random information point. I never use that type of negative reinforcement where I say, oh, I could have made, 3% today or 4% or 5%. If those things happen, great. Really, my prerogative is to make for me, when I trade $5,000 a day, that's 2% at 2,500. I make that 2%. I don't care if I could have made 20%. If it happens, it happens. But I will always lock up my 2% and walk away with my profits in the markets every single time. I don't care what happens after that. It is so important to have this mindset. It is like a non-negotiable if you want to create a career. And do that for a few years first. And then you can get crazy if you want. Then you can go into the spicy routines where you're looking for 7 and 8%, but create your income first, right? Like understand how to be a grinder first before you go and try to get these crazy returns. They're great and that's fine, but like make your money dictate your schema, use proper stop losses, which you'll see today. And it becomes a very simple formula. Game on to the next round, can't change the past. Yep, exactly.
I'm not looking for something where it sits there and hugs the level and keeps attacking it.
That weekly level considered tested on XBT, you mean? It's a reverse level. I don't think we've gotten into reverse levels. I think reverse levels is the final lesson in butterfly effect. But if this can create a ladder point, which gives you a trend like this, that level can continue to hold. It's like holding a hold level, right? So if that is where the range is, or it could even be here as the break level, right? You've got a micro range that happens. Like if this is the hold level and it's already been tested through, it can act as the reverse, which gives you your breakout in the future. You see, break up and over, back test, move up and over, and just like the same thing that happened with. We go to Bitcoin here. It's like the same thing that happens here. The 4-hour reverse level can act as a ladder point in the move. So levels can hold over time. Like this is a 4-hour reverse. Test it, back test and hold. The key is that it's not hard closing the 4-hour here. So then it's creating ladder points for the move in the future. So that can be a pretty easy level to buy. I'm pretty sure, like if you guys think back to when WD was talking about he was taking a trade. I think he took 40 40,800, if I remember correctly. This was sometime earlier this week. And then I chimed in and said I had 47.44 as my trade. That's why I had it there, because it was the 4-hour. And I just wanted to be slightly over the 4-hour level just to reduce risk of missing the move a little bit. Like I don't want to go 725 because I didn't want somebody to front run me to like 35 or 36. But basically it could create the ladder point. And I thought it was going to create the ladder point off this test, but that's fine. It creates it off the larger, which is here, holds the reverse level and moves up. So that's why WD had, I think he had 800. He might have had like 7. I don't remember the exact point he said. But yeah, 40,800. He took that 3 times. Exactly. It's like, okay, it's just the 4-hour can continue to hold because there's no hard closes, and then it can create ladder points off of that. So these are called reverse levels. I talk about them, I believe, on lesson 74, 73, 74, 75, 76. Somewhere in the last 4 lessons, I talk about them. And then reverse levels are points that haven't closed from the past. So that's pretty important. Origin levels, yes, in a different way, because origins are usually created on breaks. Reverse levels are not. So yes, similar but different. They all have a different data point and meaning. That similar and different. 80 lessons, yeah, something like that. We're getting close to the end, but that's good. That means Butterfly Effect 2 is coming one day. So that's yeah. If you look at XBT here, it's the same thing. Like reverse levels have always existed. And then so it creates a ladder point, right? So you'd have a ladder from here. You'd also have a ladder right here, right? That's why you see this right here, because that's like one ladder point. This is the next one. This is the cycle, right? Like you're talking about accumulation distribution cycles. You have this, you have that. That's the inner range, right? And then you would have, where is it? This guy here, hard closes to this guy here. So then you'd have this one here. That's, so if you were to look at how to create a cycle off of trends, this is what you would be left with, right? You'd be left with, oh, no hard close here. So we move down, we test the range, we move back up, we break over this, it creates the test of the next range. So then the reverse levels can create the trends, right? Like right here, reverse level, trend, move. This to that, right here. Have to get rid of that one here. The break of the move also to that creates that next ladder range, right? So the reverse levels can create those kind of those ranges. So important to be aware of. Yeah, I mean, reverse levels have always existed.
I'm looking for these kind of instant pullbacks because this is, a targeted level. It's exactly what it is. It's a targeted level. Now I'm almost wondering if this is actually pulling the move back off of this. It could be still moving down. What I look at is something like this right now, a very interior trend. They're all going to have small reactions. It doesn't mean that they're going to break the move, but it's just all going to have small reactions, like this kind of small little trend like this. Now it's nothing that I would say, oh, this is the level, right? Like that's not the case. That's not the case. It's just that it's like, okay, well, yeah, I might have a small reaction. You see? Now, this is a situation I don't want to be in that I was posed with earlier, where it's like, oh, this level could reject it. And then it's like, oh, it's not rejecting it. Should I sell? Well, this level could have been what was rejecting it. This is kind of same scenario. Like, where's the greediest point in this move that's going to pull this move back if it's going to continue to move back? Or is it still just moving up because it back tested trend and now it's like the best entry before the move up to 73.45, right? So always like a situation I don't want to be faced with. So,
You're welcome, Scorpy.
Exiting here, 2 minutes, 135%. Yeah, I'm good, man. So yeah, just to talk through my trade and how I made the decisions I made and, how I didn't enter the wrong trades in that moment. It's just a matter of understanding like where, like this doesn't make sense. Like this 42 level here, it doesn't make sense. I suppose you could have been in this trade, got out with profits, and protected yourself had you taken this trade, but that's not always the case. There's only 2 or 3 guys in the world who can trade like this. Maybe 4, maybe 5, I don't know, but there's only a handful that can trade like this. So, I know that, when they make decisions, they make it with thousands of Bitcoin, right? So like when you see this, this is one person starting a move and then, bots pick up on it. You have algorithms that say, oh, after it's moved up X amount of percent in 5 minutes and it moves down, X amount of percent, start selling, right? Because it's programmed to see knife catches and things like that. Like there's only a few of us in the world who can do this consistently every
So what I will say about this move is notice how I've created a trend here. Pretty important. It's the data points that we're creating in the move. Don't ever forget to create your data points in the move. We create trends, we create levels. Get those terms out of your head and start replacing that with let's create data points. Like you could have another one, this little red candle here to this one here. I would assume it's this on the higher time frame. I would actually go to a 3 or a 5 minute here. If we have a 5 minute trend, I'd use that. If we have a 3 minute trend, I'd use that. And then I would just replace that terminology with, do we have any 3 minute data points? Yes. Do we have any 5 minute data points? Yes. Start doing the same thing with hold levels. Start doing the same thing with backsides. Start creating data points and get out of the habit of saying, let's create a trend. Let's do this. Let's do that. Oh, let's create data points. Let's do that, because it'll start programming your mind to start seeing the data it's communicating. Oh, there's a 5 minute trend. What does it mean when we break a trend? Oh, there's a 5 minute hold level. A hold level can get hit. It can create a ladder point. It can create the next trend. It can not hard close this trend, blah, blah, blah. Start getting out of the habit of saying, let's create levels, and just start saying, even if it's just to yourself, still use your communication amongst your peers. Because if you just say 3 minute data point, they're going to be searching forever. They're not going to know what the hell you're talking about. But for yourself in your own brain, start thinking, let's create data points, so that you're not just creating a level on the chart that doesn't mean anything to you. You're creating a set of expectations based on what the data is reading to you. So that's key to walking through a move. Start creating data points. Forget levels, forget trends. Just start creating data points. Start creating meaning and reason on the charts. Start creating the reason why things will happen. Backside, like I said here, the first thing I saw in this move is like, oh, look at this. It's a 3 minute backside. Where did we create it there? Aha, 3 minute backside. This is going to bounce the move down in a big way. That's a data point. I know what it means when this holds the move down. That's key.
A few of us in the world who can do it like this, right? And see, because these levels are everywhere. You have hold levels, you have this level, you have that level, but to know which one is the right one. Your question is the market sentiment, what it's doing. I don't care about the market sentiment. I care about the greediest entries only, because it's just like, how can I ever lose money if I only target this? If I'm not stupid and be like, oh, okay, look, there's a little level right here, and it's only, think about it, your best case scenario, you pull back for 2.2%. Like, how does this make sense in any world? It's just creating hold levels in here. Why would you take that trade, right? But this, yeah, 1%.
Yes, Scarpy. 2 new videos
There's a
tomorrow.
pretty big thing. To me, I was looking for the level that was going to reject and break the trend down, right? To reject and lose its trend, which is exactly what I told you guys happens, right? You break one trend, you hit a hold level, you have a massive pullback. And right now, it's just
And then also one on Wednesday.
one pullback
Scarpy.
inside of another pullback on a larger time frame. So I guess this is just confirming the daily. So we're moving up now by the looks of it, right? So 12,000 Bitcoin comes in on distribution, but technically it looks like we're moving up, right? So yeah, I don't know if I'm following the sentiment of the market at all. I'm just using highly logical entries and exits that make sense. Yeah, and here's the next one. Here's the next greediest point of the move. I think this is a really good level to short. I think this is, had I been continuously trading right now, I think this is a really good level to short. It's kind of the greediest point in the move. You could start
Trend and
targeting
level all at
body
once.
candles and things like that up here, but I think in this scenario right now, this makes a lot of sense because it's also back testing its local trends. So right now it's super volatile for Bitcoin. It's going to be making these massive moves right now. So at least to see those decisions in the moment is like valuable. It's invaluable. There's nothing. You guys see how it doesn't make sense to take this level. Like, that's the way I would put it. It doesn't make sense because there's not any profits to be made. But when I see this ripping up like this, prepared to pull the trigger, and it's like, just trust my TA, mark a level that's super greedy. If it doesn't get hit because price only goes here, how often have we done that in the last 2 days? We're like, oh, damn, it would have been a few dollars off. That's fine. You just don't take those trades. It only takes one trade a day to be rich. Like, and this was it, right? So it's just like, well, now what's it matter? So that's how I would say when you guys are trading, it's quick. Trust your TA, mark a level when it starts to move quick like that. Mark it and trust it, and go for greedy stuff that makes sense, right? Imagine all the contracts that enter in this range, right? Imagine all the contracts that enter in this range right here. Imagine all of these longs and shorts, and half of them being liquidated here. And as the price is moving up, okay, think about this for a second. There's all these shorts that have been taking all these shorts in this range here, right? So there's all these shorts right here that are entering. They will slowly exit as price creeps up. They're going to start smashing that limit button. They're going to start pounding on that limit button. You know what it's going to do to price? Boom, 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 boom. And then the real players are going to say, oh, you guys are idiots. You bought the wrong level. Let's short right into you guys. And then bang, all those guys who are closing shorts or getting liquidated, all their money is lost right here and retaken back on this side, right? So just remember, like, there's things that make sense to do and things that don't make sense. What doesn't make sense is seeing this level is so close, and as it's holding, you have to realize people are going to start exiting their contracts. Oh, I shorted this. Yeah, it looks good. I'm
So I will make a comment here. I think that sometimes people interpret this as market sentiment and trying to understand where shorts and longs are closing. Really, none of that makes any difference. This is just almost in a way babble, like day trading babble that I'm doing right now, where I'm just talking about, oh, all these people. Like, there's never a scenario that I've ever used or would use where I say, oh, to make trades. Let's say that. Let's be clear. I talk about it, but it's more of a talking point where I say, oh, these trades are, all these people are going to be closing. Like, I never let that influence my decision. I never let the fact that market sentiment or people or volume or order books and the psychology of other people, psychology and data points are two things that are on the opposite spectrum. If anybody's read the book by, oh, what's his name? Like Michael Kramer or something like that. No. Oh God, what's his name? Daniel something, Can or something. Thinking Fast and Slow. It's like two opposite sides of the brain, the emotional and the logical. Like, it's just a very emotional thing we're talking about when we're talking about market sentiment. It's thinking fast and slow, right? Like the two hemispheres of the brain. One side is very emotional and really is just a knee-jerk reaction and has no differentiation between it, where it's market sentiment and people are closing. This is all just emotionally driven responses. They make no difference to the actual data on charts. So just something I want to clear up, because I do get a little hint of that in some of the comments sometimes too, where it's like, oh, what about volume? Those other, you use it for human psychology, and that's all it's used for. There's emotional reactions, parasocial type of creations, where it makes no difference what the market sentiment is. It makes no difference how many longs or shorts are closing. That stuff all doesn't matter. Just to be very clear, so that people don't get this interpretation that, oh, well, Cotton's talking about how all these people are going to be closing shorts. While this may be true, it has no effect on the price.
up, to 0.3%, and we're hovering around here. All of a sudden, price starts to creep up, and
Highly
everybody starts to
parasocial
panic, and then it gets right to the level,
in
and
its own
nobody's
regard, in a weird
taking
way.
more shorts, because it's like, you guys took shorts, you guys are stupid, you should have taken
Emotionally
that short.
driven.
Now we're creeping the level again. Now we're holding the range, and it's like, all of a sudden, one short closes, 10 shorts close, 20 shorts close, 30 and 40 shorts close. People are getting liquidated like crazy, and then it hits its level, and the real shorts come in, right? The real round of shorts. So
Thing about psychology and the mind and the way that people work is, you can think of something like TikTok or Twitter or Instagram, and a news article comes out, right? Kylie Jenner passed away. It creates a very social, parasocial response. People act on emotion. Somebody reads Kylie Jenner passed away. The first thing they do is they say, "Oh my God, have you read this?" And then they retweet it, and then they talk about it. And it could not even be true. It's the emotional side of the brain that takes over, and it just instantly turns into this, "Oh my God, Kylie Jenner passed away. I need to comment. I need to tweet. I need to talk about it. I need to tell people I know about it. I need to relay relevance." It's the same thing that moon boys do in crypto. It's like, oh, Bitcoin's going to 100K, and then you have a bunch of other people who create this kind of parasocial cycle where everybody else says, "Oh my God, Bitcoin's going to 100K." They start talking about it. They tweet about it. Then it creates this emotional response, right? It's very emotionally driven parasocialism. And these reaction points in human psychology and the way the brain works is very emotionally driven. So you have the moon boy theory, where it's 100K, 250K, and then the next person goes, screw that, it's actually going to 1 million. And then it just creates this big, it's all emotionally driven. Somebody reads it, they have a knee-jerk reaction, they start talking, tweeting about it. It's like the creation of modern day parasocialism can be drawn back to the invention of things like Twitter and Facebook and TikTok, even if you wanted to look at it in that way, because it's an emotionally driven response. It has no logic set behind it. It's the same thing that, I always forget his name, Daniel Can or something. Anybody know his name? Do I have to look it up? It's fine. Thinking Fast and Slow, the book. It's like the two hemispheres of the brain, as we're modern day, we now are working in emotionally driven systems without logic. So just realize that these volume order books, they're all very emotionally driven responses that are created, which have no real logical onset. And it's the reason why a lot of people make these mistakes. So it's the reason why we don't use order books and depth charts volume, they're emotionally driven responses with no logic follow or logic cue behind them. So just to be very clear, like emotion, you know, separate emotion also in trading as well. You separate emotion from logic because they're two parts of the brain. It's thinking fast and slow, right? It's the way that we can use the brain in two hemispheres.
So it's like what makes sense is
Daniel said.
important here.
Every author, I suppose.
There it is, Daniel Kahneman.
Yeah, Bitcoin
I
looks like it's
googled it.
about to dump.
The book came up.
How close was Theta again? Theta was close, but not that close. Oh, Theta had already broken, and it's far away from its next
So
trend.
I guess like
Yeah, I
don't
don't
fall
like
victim
Theta.
to emotional.
No. Let's check Myth.
Many
Yeah,
people
Myth
have
had
a
super crazy trend that broke.
huge problem with
Didn't really do anything with
the
it because
emotional side of
Bitcoin
their
just was
brain.
so cooked in the moment. So Myth actually has a nutty trend that it just
That doesn't
broke.
mean what you guys think it means. Let's pause it for a second and talk about this because it's important trading. Daniel Kahneman, yeah. Too many people react based on emotion. Like it's human error 101, right? We see or do or hear something and we have knee-jerk reactions in life. And this is the part of our brain that acts an emotional response, right? Someone knocks on your door and you start thinking, oh, someone's at the door. This is an emotional response, right? Oh, I wonder who it could be. This is exciting. That's an emotional response. It's the first thing that happens in our mind. So if you think about that for a second, if somebody's screaming and you're walking down the street, somebody screams, all of a sudden your defense mechanisms go up because it's a very emotionally driven response. It's the same thing we have to see in markets where if you see some crazy volume, a very emotionally driven response happens. If you see a lot of movement, that's a very emotionally driven response. If you have an order on the books, price gets hit and it starts moving like crazy, you have a very emotionally driven response. So everything that happens to us in an instance happens in emotion. As we get better, logic mixes with emotion. Emotion happens to give us intuition or impressions in life, and then we use logic to make sense of the emotion. So that's pretty important in trading. When something happens, you have an emotional reaction, but you also have the whereabouts and the knowledge to say, I understand that there's a logic behind the emotion. The emotion gives you your, it's just like he talks about in the book, Thinking Fast and Slow. Like if anybody's read that book or if you guys haven't, it's a great book to read. It's the same thing where you have intuition based on events that happen, but that can't be the logical reason why things or decision points are made in life. They're just emotional reactions, which can sometimes be beneficial. And we mix logic with emotion to find those beneficial moments. So you see volume moving like crazy, you see a price get hit, you instantly, and everybody's subject to this. And this is the way our brains work now in a modern day. Our brains never used to work like this. Well, they did, but they were programmed differently in the 70s and the 80s. Whenever you see your price get hit, there's a very emotionally driven response. So always remember that whenever something happens in the charts, you have to always use logic with emotion, not just the response that you get instantly, right? If you let that take over, that's when mistakes start to happen, is when you let too much of your emotional mind take control of your trade. Price gets hit, and everybody's done this. Price gets hit, you're in a trade, all of a sudden you're scared, or you're like, okay, what do we do now, right? It's the very quick reactions, right? Make sure you go into your logical mind too. Off topic. Digibyte. Byte sucks. I don't think so. Maybe. Oh, okay. Read it once. Loss aversion stuck with me. A lot of behavioral psychologically good book. Yep. It's it really like what he's talking about in that book is how in the like if you understand psychology, what he's really talking about in that book, which is again, it's very important for us as traders. What he's talking in that book is very much the way our minds have evolved. Like if you think about the 70s and the 80s, people would pick up their lunch pail, they'd pack it with lunch, they'd go to their factory job from 9 to 5, they'd come home, they'd invite their boss home from work, and they would go to sleep by 10 and wake up in the morning. Like it was a very logically driven world where only everybody lived the same life, and it was kind of a one routine fits all. And if you didn't fall into that routine, it was very archaic, right? Like that's the way that it used to be in the 70s and the 80s. It was, very specific routines. So it was a very logical driven world. And MTV came along, and MTV changed everything. Emotion was invented in the brain. And then we were able to break out of these confines that were created by society. Emotion started to become more relevant as a form of psychology in the human mind. TikTok, as of most recent, Facebook, where more emotional driven factors were changing our world. And now everybody's overreactive in emotion because our brains have been subjugated to see nothing but emotion. So we live in a world that's very fast paced. If you guys have ever heard that term, we live in a very fast paced world. It's true. You go on Twitter, you see something trending, instantly you're given emotional snap cues in your mind. It's never used to happen in the 70s and 80s. And, then again, the turn of the century happened, technology came about. Now we live purely emotional and less in logic. So there's a balance to be had there where we overdrive the emotional sides of our brain now because something happens. We have these knee-jerk reactions, which is actually extremely detrimental in the markets because we're programmed on a daily basis to have emotional reactions based on the cues we see. So then if you think about that in market sense, imagine a level gets hit. Your brain is so pre-programmed because every day you're looking at Twitter, TikTok, Instagram, Twitch, YouTube. You're so preset to have emotional responses. Think about how that works in the markets for a second, from a psychological standpoint, from a psychology standpoint. Think about what happens when a level gets hit and you're already pre-programmed to see trending tweets, have an opinion, comment, parasocial, regurgitate. It's the reason why there's so many I won't go down there. I won't go down that path. That's fine. Well, another topic for another time. But anyways, point being is that don't let emotion take over. Use logic in trades and not emotion, because when you use emotion, it's like you might as well not even use TA. You might as well just trade off intuition. You might as well be the blood moon traders, right? Like the blood moon where they use astrology to trade. You might as well be them because you're just acting on intuition and purely emotional cues and responses. It's about the most reduced form of trading you could go through. And you might as well not use TA at all at that point, right? Because you're not using logic, and TA is pure logic. So, be very aware that when you're in a trade, when something happens, we are naturally pre-programmed right now through this period in time, 2021, 2010, 25, and on, until we figure out this next hemisphere of the mind where emotional rebalances. We're pre-programmed to have emotional responses in day trading. So this is very critical in the way in which you analyze markets and the way in which you actually take trades. And a lot of the times when I see traders fail, it's because it's like I don't know, overreaction of the emotional side, right? Like that's what I mean by the emotional side of the brain. Act. Scaling coin makes if even better. Yeah. So you just have to be very aware of that. The psychology plays a huge, huge role in day trading. I'm going to be talking more about this. Naya has been on my case about making more mental analysis videos. So I'm working with her, and we're creating more content with that right now. So it's good, but you guys just have to have that, arm up to know that whenever you're trading, looking at charts, just realize that the emotion is going to be the forefront of your mind. It's what takes over because it's the first thought that comes into your head. It actually takes work to draw back and go back into a logical mindset. So just realize, instant reaction, volume, these things like that, this chop, chop, snap, snap kind of reactions, they're highly emotionally driven. And you actually have to work at slowing your mind down in order to see the logic behind the trades. Because you could look at a trade after. Imagine this for a second. Here's a very simple example that everybody can relate with. How easy is it to look back at a trade and see where the mistakes are versus doing it in the moment? I've seen that comment in chat twice today, actually. I don't remember who said it because it's just like for me, when I read that, I'm just like, oh yeah, this is emotional brain. How often does that happen when you guys look at a trade and you can't make sense of it in the moment, but you look at it after and it's like, it makes complete sense? Because when you look at a trade after, there's no emotional cues. So it's purely logical. Think about that for a second. Go back, you look at a trade, super easy to understand. In the moment, it's a fucking nightmare. You don't know what's going on. Well, that's because the emotional brain is dictating. The emotional brain is driving, not the logical one. You guys refresh, and I'm going to wait a minute to start this. Highly important as a trader. Highly important. It's like going onto a battlefield without an ammo clip. going with like a Going on to into a war with no ammo but a gun. It's like, oh, cool, man. What am I supposed to do? Throw this at my enemy? It's like, okay. I just purely emotional. I just grabbed the gun and I ran because I'm excited. Oh, you forgot your ammo, dude. Well, you can throw it at them. I don't know how well you'll do, but you know, you can throw your gun at them. So I was like, I kind of like the same thing, right? That right there, that one little talk about emotional and logical is probably the most important thing I've ever said in any of these sessions, by the way. It's probably the one defining factor that stops good traders from making money and makes bad traders lose money faster. It's like the one factor. If I had to make a list of the most important factors, I would just say parasocialism as number one, because that to me, I understand it as the emotional brain. That too, technical. Yep. Technical can't exist if emotional shrouds it, though. So even with the information gained, emotional still becomes more important. But yep, that's true. Okay, let's continue.
How much is the gap here? So it's a decent sized gap, has a pretty crazy trend. It just broke. Does it have any origins? It does right here. So this is in the same spot that potentially theta's in, except it's already broke its trend. So this looks really good. What would be kind of the final trend we have here? Yeah, myth is where it's at. Myth is the coin that's going to pump for sure. This is
Emotional that I'm
crazy.
working to master. Yep.
Now I don't know if it's going to pump. Bitcoin has to move up, but if Bitcoin moves up, this thing is readier than it gets. So yeah, I'm going to take a look at see what Myth is doing. Yeah, there's money to be made on Myth for sure, but we just have to see what Bitcoin's going to do first. I'm going to keep this one here so I can put it beside my other chart. I'm going to keep up my chart on my other screen. That's the USDT. Keep an eye on this thing. Yeah, Myth looks nuts. But price, it's all about price. I'm going to take a risk. It's not going to be on
You're welcome, MD.
NTXS right now. It's going to be on Myth. That's for sure.
It's beyond important what I just talked about. It's
Yeah, Myth looks
a
nuts.
driving factor of
This is a
success
crazy
versus failure.
trade on Myth. If Bitcoin allows for it. Bitcoin looks like it's falling, so where can it fall to? That's breaking its daily trend, is it not? Isn't that what we're doing on Bitcoin? Losing trend? Yeah. Losing our trend on Bitcoin right now for the first time. So where do we fall to then? So we're going to fall to like this 4-hour range potentially at 5,900. Myth doesn't have a range it can fall to. Oof. $304.
No, it's really quiet here.
Before it takes a big move up. Yeah, I'll be keeping an eye on Myth to take a trade on it.
Turned it up, but I'm kind of just
somewhere
muttering
between
about different
300 and
trades at this
310
point.
on the USDT value. Yeah, like maybe 310 or something like that. I just want Bitcoin to dump first because it does look like it's about to dump.
I'll max out the volume on it.
So let's adapt this to the 4-hour. This will be the last thing that it tests to hold. Is this trend here?
Perfect.
Okay, so we've got another one, Myth. Myth looks really good. Now we just want to see Bitcoin dump so that we can take a trade on myth. MPXS having a small pullback right now. Not much of one, just very tiny. No, nothing, even barely anything there. There's no volume in it to pull it back. Jesus. There's no volume in MPXS. How do you get filled for 10K when it's 25K is a total daily? Jesus, I don't like that. I think there's a good level, 66.38, but I don't know if I would have taken a trade
At
there.
this point, I was just waiting for the move to
Well, that's a
develop.
good
I was
level.
just sitting here
A
and
good
waiting
level
for the move to
to
develop to
start a
look for the
position
next
trade.
trade.
It's the
Nothing
final
exciting
hold
here.
level. Anyways, on the move down, that's starting this whole entire thing. So this is, I guess, the beginning of the ascension to 5,900. Maybe if we can get a bounce to one of these other levels, maybe we can get confirmation on this trade right here and take a short here. 66.14. I think that would be a smart trade. 66.14 on BTC. And if it pulls back off that level, you're good to leave it. So 66.14. Let's see the fake break, the fake news breakout, and then the dump. Wow, Myth is so close to a breakout. It's so crazy. I can't believe it's already traveled 100% from its bottom and it's approaching trend. That's really crazy. Bitcoin's coming up 66.14, maybe. Hopefully breaks this trend and then has a dump here. Rejected, swing trade.
Just going through this quickly because I don't want to
This
waste all
was-
our time watching this thing move down. I think people can do their own post analytics here into thinking where a move might go.
Who says it's going to break trend? I didn't. Maybe it will. Maybe it won't. Maybe we low confidence.
This is kind of just
Backside. I want to see the front side in here.
Yeah.
Not convinced that's it. Let's go greedier. Not something I would take a trade on. Not bad, actually.
This is the part of the video when I said earlier, I don't think it's going to take us too long to get through walking through a move today because this part of the video was kind of just
front side. That's good.
a little bit pointless here. Not pointless
That's
for
the play right there.
the video, pointless for our group
Would have been a
because this
smart
is just
trade to get in
what we do
earlier
all the
then.
time.
That's okay. So at least we know what to do next. He still
Breaks trend,
that
very
and add a little-
straightforward.
where I'll take my trade. Like 100
Yep. Don't
could be
really think
moving-
there's any point to the
could
rest of the
possibly be
video. Okay.
breaking up. So, you know,
That's fine.
certain signs will tell me like, okay, you need to stop shorting.
Over the last 10 years,
This is our next up on the list, so let's make sure we're all here at 9 to watch this. Questions and comments. I wanted to leave some time for that. We've got 10 minutes. So I can make a comment while you guys are typing. I see some people are typing. My objective right now with this group is to take everything you guys say and use those to understand the points of weakness in people, like in this group, where people need help the most. So a lot of the content that's going to be coming out in the coming weeks and months is directly targeted to this group, indirectly released to the public, right? Like the stop loss guide video. I saw a major need to have this thing for this group specifically. Mental analysis work that I'm starting to do again, specifically relating to some of the things I see inside of this channel. So everything I'm doing right now is to make sure that this trading group is given the highest chance to succeed by me identifying where you guys are weak and then creating things for it. So just to put, so if you guys have points where you're feeling weak or not as strong as you'd like to be, voice your opinion, because that's what I'm dictating the content creation on right now. Live stream at 10:30. Yes. That's why I'm putting such an emphasis on the stop loss video right now. It's critically important, and it's going to change like every single trader who watches it. That's why I'm also getting into the mental analysis side of things, because you guys have a lot of the technical tools. Like I see a lot of great traders in this channel, and then I see errors being made. That's why we talk about mental analysis today, because there are errors being made where traders shouldn't be making these errors because there's other factors that are stopping people from succeeding. So everything that we're doing right now is indirectly released. Stuff like mental analysis will come out. Again, Naya's been on my case about a few different topics where she sees people inside of this group are struggling with, which is good. It's very good. It makes it so that I can understand better, because she has a very different set of skills than I do. I understand psychology because I grew up in that world, but I'm also not a major in psychology like she is as a professional, right? So that's definitely something great. What level will test the range? 5 minutes. I can be quite a conundrum. Are we talking about right now, Orca? Like, are you talking about right now in the specter of this move right here? Not talking about inside of this move. Level test range, it depends on the range is created. It depends which range you're talking about. Maybe in butterfly, my one all-time wish list. How do you see moves when there's no prior history? You want the secret sauce for the 64.6 and all these bottoms and tops. You want the secret sauce. Something to do with trends. I don't know. This is what I really want. All I want for Christmas. Oh, I see. You want the secret sauce. That's what you want. I understand the concept, but don't know which ones have more priority to apply at which moment, like origin. Okay, this is a good one. This is a good one. I like this. This will go into butterfly effect too. So this is something I was planning to do, but this is, yes, like the queue of information. So this is going to be butterfly effect 2, lesson 5, I believe it is. 6, 7, lesson 7 on butterfly effect 2. I go with choosing the correct level in any range. Help with smaller time frames, because I don't want to wait hours for next moves. Smaller the time frame you go, there's more information. The higher time frame to take into account. Range finding, especially around 5 and 15 minutes together. Yeah, I still struggle with pushing myself outside the comfort zone. People talking about in the now in session was eye-opening. Seems like I have the same issue a lot of people with regards to failure, keeping me complete things to a T. This is something I want to talk about. Great comment, Lagendak. I mentioned something pretty important over the week here, which really led me to think, like, back to my mental analysis work and back to my psychology roots a bit. She mentioned, I think it was like detrimental mental programming or something to the sort, or harmful mental programming. She mentioned harmful mental programming, which is exactly what you're talking about, like in DAC. It's the way she put it is that it's the software that runs in our mind. So, like, imagine you have a virus and it's harming your computer. You don't really know it's there. It's just a program that you have to uninstall, right? That's the way she mentioned it. That's how I understand it. And this is something that a lot of people have who have roadblocks. Um, Something where we're not challenged enough in life and things become too easy. So we have a lack of effort to try. Some people don't absorb the material properly. Now this is okay. So here's one I'll talk about. Say you have a human being, right? Maybe there's some people in the group that are like this. There's a video in front of them, but they don't quite understand it, or they understand it, but there's a very deep way in which they could understand it more. They could understand it even further, right? This is onset by harmful mental programming. So there's something else that limits that person from learning. So the example I will use is somebody's trying to learn this material. It doesn't make sense to them. This is typically a lack of vision, is the harmful mental programming that they have. So it's not the fact that the material's wrong, and it's not the fact that they need to watch it multiple times. It's actually a much deeper psychological problem. So this is like a lack of vision. So when somebody who's watching videos can't quite make sense of them, it's because they have a lack of vision, right? And a lack of vision is something that happens in the subconscious mind. And the subconscious and conscious trick us into thinking that, okay, well, we don't understand the material, therefore something else might be wrong. Meanwhile, a lack of vision is really what it boils back down to. Somebody who can't understand the material properly, it ends up being a lack of vision. So they have to watch it multiple times to try to create a vision for themselves, right? Like the vision of what these things can happen, as opposed to somebody who has the opposite, which would be a great ability to have these things put together into theory for them. So the opposite of a lack of vision, someone who takes something and has a very clear and decisive outcome, they will not need to watch this video 4 or 5 times to understand it. So a lack of vision is a problem where people need to watch something multiple times. So we all have these types of mental programming in our mind. And this is something where it's not onset by the material. It's typically a subconscious cue. And like I said, the way she puts it is like software that needs to be uninstalled. Harmful mental programming. Harmful mental programming ends up being roadblocks. If you want to put it into even a more layman's term, it would be a roadblock. So where do the roadblocks exist? Well, the roadblocks are the detrimental programming that we have in our mind, or the harmful programming, or the destructive programming that we have in our mind. Sometimes these are created from childhood. Sometimes these are created in adulthood. Sometimes they're created in university and school. Another one is when people have, when people don't, you get this thing with highly intelligent people. So there's someone who she was working with this week, and she ran it by me. And she's working with somebody who's highly intellectual. Because they're so intelligent, they don't challenge themselves. So maybe in university it was too easy for them. Maybe school was too easy. When things are too easy for people, it makes it so that there's a lack of challenge, and a lack of challenge leads to boredom, which makes people think that they know more than they actually do. So this is like a huge one in life, where people who are too smart often fail more than people who aren't as smart, because they've had a lack of challenge all their life. That lack of challenge leads to them not understanding topics at a deeper light, because their subconscious mind tells them that this is boring. I don't need to learn this. Therefore, I can just kind of skip it because I know everything. It's the I already know attitude, right? This is onset by people who are intelligent. People who are intelligent often fail greatly at many different topics in life, because as they get older, that lack of challenge that they've had all of their life makes it so that they don't absorb information because they're too smart for it anyways. So this is another harmful mental programming. People who have high intelligence often face this, where a lack of challenge on the easier things in life has programmed their subconscious to tell them they don't need to pay attention because they know it anyways. And then they miss critical key components. That's really like in DAC, what you're talking about is really harmful mental programming inside of people, which I am going to be creating content about that. I've been watching what people's struggles have been. And like I said, working with Naya, and she's been helping me understand it better in more relevant terms, so that I can make material to help people with that. So yeah, I'm trust me, I'm watching the group. I would say so. And I think a lot of people think mental analysis is positive attitude. They boil mental analysis down to these kind of things like, oh, have a good environment, have a positive attitude, be happy. Self-talk. Self-talk is a good one. Self-talk doesn't fall into this umbrella of this misunderstanding of mental analysis. Mental analysis goes much deeper than thinking positively and having good environments and the support of people. While these things are all important, they don't tackle the real problems as to why people fail, which is like detrimental mental programming or harmful or destructive mental programming would be one of the harder parts of mental analysis, is where people fail. Not just saying, oh, we've got a positive attitude, we're happy today. Yes, take your happy pill and everything is okay. Okay, like holy shit, dude, I've never heard something so stupid in my life. Take your happy pill and everything's fine. Like that doesn't help you rewire your mind for success, right? So I think this is really important. Origins and ranges, so reverse levels, origins. Yep, okay, that's a good one. You identify the backside and front side of a range, you say the levels shift after they get tested. So front side becomes backside. At what moment have you adjusted these? So this is all decided in the moment. I can never give a static answer to a lot of these questions because it's like it's all dependent on this on the move, like the architecture of the move. Getting better at TA and training my eye to find a lot of good spots, like execution and trusting myself to get into those moments. No failure is still a challenge. In a few words, mental analysis. Yep. Something deep dives. Can that data point communicate that the range attack is weakened? No, I wouldn't say the range is weakened. I would say it's strengthened based on interior trends created. Maybe when an interior trend breaks, then it could be weakened. Talk about technical means this, technical means that, and maybe it's in the future. I don't think there's enough connecting all the pieces together, such as this is what, yeah, you're looking for static answers. That's where the problem is. Longs here because we can go to move X profit cap, therefore scalps going to be looking for, of course, more of that meta in order to be successful. Without it, everything's a Pandora's box, which side will break, all levels, trends, both sides. They're getting steamrolled and Rex shorting and longing the other side is probably my biggest lack I see at the moment. Maybe an experience thing. I think it's just trying to have too many static meanings on the chart as to where we need to understand all these theories and use data points to connect them. You know what I mean? Like there's a lot of information that we can. So here's the thing. I see another big roadblock with people. I see this one probably more so than any other roadblock in trading. So this is a great comment I see because it allows me to elaborate on something. I got to wrap up quick because the stop loss video starts in a minute, but I see this problem more with anybody. People who try to simplify things into, like I've seen this where people say, oh, your material's too complex, it's too advanced. Okay, let's talk about that for a moment. The idea of too complex based on what metric? Based on the fact that you want a simple answer. And I'm not saying you, I see, I'm talking about, we've created character X. Character X tells Cotton, he says, your material's too advanced. This can be so simplified. Okay, simplified to what? A 1, 2, 3 step system? You want a strategy? You want me to tell you, go do X when X happens? Or do you want to learn the theory so you can make these decisions on your own? If you go to any university in the world that's worth their money and salt or worth their grain and salt or however you say that saying, they will teach you 1,000 things that don't make sense so that the day you graduate, you have all the tools you need to be independently thinking, making these decisions on your own. No university in the world. This is what community colleges are for, 1-year programs. Oh, you want to become a tradesman? Easy. We pick up this plumbing tool and we go and we twist that pipe with this amount of tension because the job requires X and you're done and you collect your check. This is the difference between university and community college. As to where community college would just teach you, hey, go do X when Y happens and charge your bill and you can be a plumber. Great, thank you very much. I now have a trade. This is the same way I see strategies in markets. You can either learn how to take static concepts and fit a circle into a circle all the time, which at that point you're a plumber. And nothing against plumbers. Plumbers are great careers, but it's a community college for a reason. It's learning a skill in 9 months. Or you can go to university, study for a master's, learn the deeper, most complex parts of any theory, and make these decisions on your own with a greater understanding. So this is a common roadblock I see. People are looking for answer X. They want something to be simplified. And so I see this all the time. People in YouTube comments are like, well, this material is great, but it's not useful because it's not simple enough. It could be so much simpler. Why do you talk about this? We could go and we could dumb it down in this way. Yep. And those are the words of a failing trader. Those are the words of somebody who's going to have a very short-lived career. They have a lack of vision because they can't understand the deeper theory of what's happening. So when you have a data point, for example, it communicates X amount of outcomes. Well, if you don't understand the data point, you can't understand the outcomes. Therefore, you have a lack of vision. So when people who have to watch material over and over and over, this ties back to a lack of vision. When people who have to watch material over and over and over, multiple passes, they can't see what's being communicated on a larger scale, which means they have a lack of vision. They can't understand what the data points could possibly communicate. Well, how could you understand data points and what they communicate if you never go through all the lessons to understand what the potential outcomes are? How can you have vision without knowing the outcomes, right? So that's a really, really good thing to realize, is that you're never meant to take all of these theories and put it into one kind of dummy guide where it's like, oh, I do X if X, I do X if X. And there's just kind of one simple formula. This is why bots don't work in the markets. There's not one simple formula that boils down to, here's my path. I am now not having to use my brain, right? And by common sense, right? It's the same thing when you compare community colleges to universities. There's reasons why community colleges exist. They teach us strategy, how to make money. Like that's all it is. It's like an EMA. Community college, go learn how to be a plumber. It's a strategy. Here's your EMA. Here's what you do. Twist the wrench, make your money, walk away.